Hi, I'm Andrew Kelleher and welcome to the latest edition of the JMI Wealth monthly video series. Look, we're recording this in early August, and actually over the course of the last month, over the month of July, in Australasia here, share markets, while they've been relatively stable, we've seen some small losses in Australia and New Zealand. But if I look at the rest of the world, if I look at the global markets in New Zealand dollar terms, they've mostly delivered small positive rises. Now, over the course of the last couple of editions of this monthly video series, we've talked a lot about interest rates. And I think it's fair to say that in many jurisdictions around the world now, people are starting to grapple and wonder about the future direction of monetary policy in various places around the world and how growth and inflation are going to play out and affect those monetary policy settings. And locally, we've seen some key developments on that front over the course of the last month. As far as inflation is concerned, well, in July, we saw the release of the latest inflation figures. Now, in New Zealand, that's expressed through the CPI, the Consumer Price Index, and that's for the second quarter, which is for the 3 months right up to the end of June. Now, we're expecting to see inflation rise by 0.8% for that quarter, which was pretty high in itself. We're very surprised to see the outcome at 1.3% for the June quarter. Now, economically, that's a very big shift, and it's probably the fastest pace we've seen inflation rise at over the last decade. If I look at the annual numbers, annual inflation was at 3.3%, and that's also the highest we've seen inflation at since 2010. So we're really starting to see inflation heating up. And the key issue here that we've got is that a lot of the various pieces of that inflation don't appear to be temporary or transitory. There does appear to be an element of persistence about them, and that's going to become a problem for the Reserve Bank. And then last week we saw the release of the latest information on the local employment market. Now, we're expecting to see the unemployment rate fall. We're expecting to see it fall from 4.7% down to 4.4%. It actually fell to 4%. And that's the lowest unemployment rate we've seen for decades. And in fact, the number of unemployed people fell the most it's fallen since those records began in 1986. Those two key developments put the spotlight very much on our central bank and put the spotlight very much on where the current monetary policy settings are. And you may recall that we've currently got a very low official cash rate. That's because our monetary policy settings were put in place back early, or sort of in the middle of 2020, and that was to assist the economy to recover from that economic interruption we saw that was prompted by the COVID pandemic, which affected the first quarter primarily of 2020. Well, you could argue now that we've very much achieved that economic recovery, but those monetary policy settings are still set where they were in the middle of last year. So we're very much expecting now those policy settings to be reset, and most economists are now predicting the official cash rate will rise to 1% by the end of this year. Now, bearing in mind the official cash rate is at 0.25 at the moment, that's quite a swift and rapid rise, and we're also expecting to see further rises over the course of 2022. The situation isn't as clear in other parts of the world. We've got the coronavirus Delta variant spreading throughout the world, and particularly affecting those populations that have large numbers of non-vaccinated people. So that's bringing a little bit of uncertainty around the economic recovery and a little bit of uncertainty about where monetary policy settings are going to go in other jurisdictions. So what we're seeing is we might end up with monetary policy going one way in New Zealand, but going a separate way in other parts of the world. We've also lately been working through the second quarter earnings season for companies in the US, and the outcome of that has been pretty good. A very high percentage of companies have actually exceeded analyst expectations. But the interesting thing is we haven't seen a great reaction in the actual share prices, and what we can infer from that is there's probably quite a lot of good news already built in to where the prices currently are. So what does all this lead to in terms of our investment thinking? Well, we're actually still reasonably confident that the economic recovery from COVID in many places of the world continues. So we're still pretty happy being slightly overweight what we call growth assets. So that's Australasian shares or global shares. We have a slight preference for global shares, and in terms of Australasia, we're still continuing with our preference for Australian shares over New Zealand shares. So that's a wrap for our August update on the JMI Wealth monthly video series. If you'd like to talk to us about your investment goals or your current investment portfolio, then feel free to give us a call, or alternatively, you look us up on www.jmiwealth.co.nz.